It's lovely to see you today. I will start with a report that 15% of all VC check writers globally are women. I think we have most of that 15% in this room today. Let's start off with evolving investment strategies. Henadi, I will start with you. I'll start, since you bring a unique perspective as a global supply chain company working across the world, and as the head of Agility, which looks for unique opportunities in mobility and supply chains amongst other sectors. The world is changing. Our region is even changing. Even the world as a whole is. From railroads to AI mobility, digital logistics, changing tectonic geopolitical shifts. What are you looking to invest in today versus what you have been looking at 5 years ago?
Great. First of all, Leba, thank you for hosting. Okay. First of all, I want to thank everyone for joining us here today, and also thank you to MoneyTech, MBK, and الجرئية. It's a sign of times when MoneyTech has a platform of more than 60% of the panel and audience women, so I think that's quite impressive. So in order to talk about agility specifically, let me take you back to our roots and why we started investing in venture capital. So initially, Agility obviously owns businesses and operates them alongside the supply chain, and what we noticed 10 years ago is that the cost of technology is becoming cheaper. So in order to survive, and in order to thrive and drive productivity, we decided to embark on digital transformation. And our approach to digital transformation is really threefold. The first thing we did is we ensured that all of our CEOs within the businesses adopted technology relevant to their business in order to drive and enhance their margins. That was number one. Number two, we started incubating businesses. The reason why we incubated businesses is we believe that in some of these areas, technology is actually going to disrupt certain parts of our value chain, and we wanted to be ahead of the curve. And the third part is venture capital. The reason why we started investing in venture capital is because we knew there were entrepreneurs out there, technologies out there that were beyond our scope, and that they would be the first in order to unlock value that are relevant to us. So we started betting in those businesses and specifically those entrepreneurs in order to be ahead of the game and in order to think through how do we actually bring that business or that product back into our core operating business. So when you ask about the mandate, even with all the changes, the mandate doesn't change. Our investment in all these areas does not change. But what does change is the actual technology itself. I'll give you an example. Several years ago, blockchain was the thing. So we started testing it. So we tested it alongside customs clearance when it comes to logistics. We tested it, we realized this is an interesting technology, but it was not at the point where it had the ecosystem that it could scale. So we said, wait and see. Today you have AI. AI is rapidly growing, and we're actually applying it in different parts of our supply chain and value chain. We've been doing so in the past few years. And the great thing about AI, it actually drives productivity and reduces costs by at least 30% within the supply chain.
Interesting. Noor, at Global Ventures, you had an early stage emerging markets investing in the Middle East since 2018 with more than 300 million of assets under management. Can you really quickly, walk us through your selection criteria for those investments? And then for contrast, spend a bit of time telling us about what you are looking for the next 300 million.
So thank you for having me, and it's a pleasure to be here. We manage $370 million now. We're deploying across the Middle East and Africa. We've made 61 investments. We have wonderful investors alongside us. So thank you, Agility. Thank you, Henadi. Today, when we take a look at what these 61 investments have in common, which really tells you the denominator of what we look for. For us, it's really fast-scaling companies, so companies that can scale quickly, founders that are very, very ambitious. So either ambitious in that they've seen a regional white space and they really want to go out and conquer that, like Tabby, which we invested in early, Paymob, and a couple of others, or they identify an opportunity to innovate globally. So that's not an emulation into the region, but rather, hey, globally there's a problem in supply chain or in agri-tech or in fintech even, and I want to solve this global problem, and I can use the world's best technology to address this from here. So there's two types of companies we invest in. One are the regional white space emulations, and they do need to cater to the local nuances. We acknowledge that. And the others are generally the global success stories, for which we have now about a dozen companies that have more revenues globally from the US or from Europe than from the region. An example, like you asked, is one of our cybersecurity companies now has 60% of the revenues in the US. This is a Dubai-based company, regional founders, really tackling surface attack management from the region, and yet the US is their biggest client base. So we can have this leapfrogging in innovation and technology that allows the region to build best-in-class companies. For the next 300 million, inshallah, as we think through industries and what we want to invest in, beyond the fact that we are Series A, so we like it when companies have at least $1 or $2 million in revenue. We are mainly B2B when we take a look at business models, so 80% B2B will continue with more of the same. But we sometimes and often take a step back, and we publish a lot of research, so it's on our website. You'll see what the next 300 million are about there. But every quarter we put out a new industry report, and occasionally we find that the macro trends are converging with the grassroots movements and the tech that's being built. And those industries we consider inflection point industries. Right now that's happening in supply chain and in agriculture or food security, where the regional and global mandates are of these two industries and where technology is currently enabling the industry to just fast forward ahead are combining and converging. And therefore, those are the inflection points for Series A investors. And much of that is happening out of the region. It's incredibly exciting.
So does region play a role?
The region does play a role. I think for us, when we take a look at the region across different industries, there are some industries like supply chain and like food security or agriculture where we still import 85% of our food. Right? Our manufacturing capacities are very low as a percentage of GDP compared to global benchmarks. So where we see in the region we've actually fallen behind historically on building out our industry, there's the opportunity to leapfrog, to say, hey, we don't have all these incumbents telling us it cannot be done the new way because it's been done this other way for 30 years and human tendency to change is slow. Rather, we come in and say, hey, there are no legacy incumbents telling us that we can't do this. So technology is going to come in and do it a brand new way, and people will accelerate this, and the regulators and governments are supporting these industries. So actually, we have a chance to innovate before anyone else does. And we've seen that now repeatedly in the region, in manufacturing, excuse me, in 3D printing, in food security innovations. So really, the region is ahead of the world in these industries at this point in time, because of the lack of incumbents stopping in the way of the new innovators.
Do you look at gender?
Do we look at gender?
Yes.
We always look at gender. Look at this panel, it's wonderful. So for us, we take a look at gender at the top of our funnel.
Okay.
So our mandate is, I always want to be able to see that when companies are inbound into global ventures, at least half of them are female. Not throughout the funnel, because then that's not fair. But at the top of the funnel, we want to see as many women building companies as men. And I'll say that in AI right now, the last 5 AI companies we've seen, 3 are female-led. It's very impressive how women are getting to the forefront of this and building companies in this space that are meaningful.
Yeah. Tammer, I'm sorry, you're overshadowed here with women. At Souq, you have a global portfolio with a focus on fintech and climate tech. And in recent months, we have seen you've deployed funds in the region, and you have secured funds from the region as well. What are the changes that you see taking place on ground on both sides of the transaction? I mean, in terms of what your funders seek, in terms of the founders seek?
Yeah, so Souq is a venture capital firm. We've made over 300 investments, and they've been all over the world. The last 4 years, we've been focused exclusively on the Arab world. And I want to say that we are a female-dominant firm, so most of my colleagues are females, and you got the bad luck of getting this guy.
Are you just being threatened being here?
So, I'm with you. So, I think Noor and Hiba made very good points. I want to jump on a couple of them to put it in context of like where we see the biggest problems in the region are and how venture capital fits into that. The fundamental issue in this region is that we have 450 million people living in predominantly Arabic-speaking countries, and we have human resources, and we have physical resources, and we have capital, and we have geographic proximity, and we have geopolitical significance, and we have land, and we have sea, and we have mountains, and we have snow, we have everything across the Arab world to create a mega economy that would compete with other economies in the world, but we're all divided into 20 markets that are insignificant in and of themselves. And so I think when we think about concepts like food security and manufacturing, insourcing, we are facing this challenge where we're solving local or country level issues when actually in the long term, at the decadal or centuries long view, we need to be solving problems that are going to cut across a bigger swath of land and a bigger swath of people. And I think that in our view, we are starting to realize. You asked me what the sort of like fundamental changes to the funding and the founding landscape is. That realization has cut in. I think in the last 10 years in this region, the companies and the investors alike are starting to understand that actually we need to back enterprises, and there's so much to unpack when I say that, but we need to back enterprises that are going to cut across the whole region. And that will allow these companies to get to scale, and that will allow investors to get outcomes, and that will allow a virtuous cycle to perpetuate itself. And so I think we're gonna unpack some of these points as we go on.
Yes.
But that's the fundamental change that we're seeing in both the funding and the founding environment today.
Yeah. Wafa, as a founder with experience in scaling a company, and equally important as the person who interacts with women founders and women investors on a daily basis, what can you tell us about their priorities? Do you see divergence and parallels along genders?
Hi, everyone. It's such a pleasure to be here. So first of all, I'm at an advantage over this committee or this session just because I'm Bahraini. I always say Bahrainis get the most love when they come to Kuwait, so I'm very grateful for the invitation. And from Money Tech, also representing the entire founder community. I'm the only founder in this event, so I'm going to try my best to represent as many women and as many founders as possible. The biggest challenge I think founders face, female founders face, is, and the priority and what's on their agenda is access to fundraising. So let's look at some data. 2% of VC funding goes to women, and out of that, 0.79% of VC funding goes to women in MENA. So fundraising is still the biggest pain point that female founders face, according to our research and according to what we see in Playbook. Now, Jenny Johnson from the Horizon Summit at FII says, it's great business to invest in women. So this is not a CSR initiative, this is not ESG. Women actually create more profitable companies despite getting less access to funding. So the idea here is we have an incredible room of change makers, policymakers, VCs. How can we be a part of this change and tap into that business opportunity? And it really starts from the top down. Leadership today has to fully embrace gender diversity and inclusion as a value. This is not an activity, it's something that has to be embedded. And the organizations that have that from the top down, you immediately see it cascade across the entire entity, where now it becomes a KPI and a metric to ensure that their portfolios are diverse. Number two, having diverse investment committees. As a founder, we pitch to hundreds of VCs, and I think that on its own is an experiment in terms of the feedback that we receive. But as a founder, before we even pitch, I can ask 3 questions to the venture capital or the family office, and I'll understand or have a better idea of the probability of investment. Number 1, how many female founders are in your portfolio? Second question, how many women are in your investment committee? And lastly, what's your strategy on diversity and inclusion? Based on those answers, I will have an idea if I'm going to be able to get the investment by the end of the call. Now, number 3, women are notoriously over-mentored and underfunded. And as a VC, if you're running a program or an accelerator, putting a symbolic financial reward goes a longer and bigger way. So don't underestimate the power of providing finance as well as training. Now, at Playbook, so Playbook, as you know, is a venture-backed, award-winning edtech platform. It's a 500 portfolio company. We have over 10,000 members on our platform, which is very exciting. 20% are part of the investment community. Now, Playbook in May acquired Women Spark, the largest angel investment network out of Saudi Arabia. It has over 100 active angels. And along with Playbook's investment community, how we're trying to be a part of the solution is match angels with founders on the application. So we have now launched a founder marketplace where we have 25 vetted startups who are looking for fundraising, and they're vetted by our venture scouts. So this is also a great opportunity for VCs to tap into that and to start their journey to ensure that they have diverse portfolios.
So what are the female investors' priorities?
Female investor priorities, I think female investors, according to our experience, have a different mandate. They have a personal mandate. They invest on different values, very personal values. And I think they want to also add value to the founders. So they want to be a part of providing solutions for problems that they want to solve, which is why, again, our cap table has 80% women, which is unheard of, because women resonate with the problem we're trying to solve, but they also get their hands dirty. They're there working for the business. They thank us for giving them the opportunity to invest. I think a lot of our female angels don't get invited to invest in startup or tech companies, partly because their ticket sizes are lower. So what we've done is we took one ticket size and invited our customers to invest in Playbook. 32 of them converted into investors from 16 countries. So we welcomed international investors from the US, from Canada, from Portugal, from Germany for the first time into our platform. And they started off as customers first. And they can invest from as low as $10,000 all the way to $200,000. But obviously a lot of companies don't necessarily tap into that as an opportunity.
And I think one of the priorities is growth and scaling. Noor, I want to go back to you and look at focusing on scalability and high growth companies. What regulatory challenges do you encounter? Is the legal framework available for VCs to operate smoothly across GCC borders? Is that even a factor?
Yeah, we don't really think of the region as having regulatory hurdles for venture capital. Closer?
Yeah.
Does this work? Great. We don't think of the region as having regulatory hurdles for venture capital. There's enough frameworks. We have several wonderful financial centers. Each one has their own framework. Each one wants the VCs to set up there. I think that the hurdles that we faced historically lie more with the founders on the regulatory side. So ESOP plans being difficult to implement regionally from a regulation perspective. Now that's getting easier. So things of that nature can hinder. But generally, I think that the region has a strong framework. I think it's still a question of quantum of capital. So venture capital regionally last year had a relative high. We had $2.6 billion invested across MENA, across 450 million people. That for venture capital was high. The year before was $3 billion, but that was a high, the highest ever. When I started Global Ventures 6 years ago, it was 400 million. So we've grown drastically from 400 million to 2.6 billion. That's wonderful. Last year, the world had 285 billion. So from a global perspective of $285 billion, the region had $2.6 billion, and we're celebrating. So when you think about that, that is a much bigger hurdle than the regulatory infrastructure which exists. And then to juxtapose that with the fact that the region is actually a source of capital for most of the VCs around the world puts us in a bit of a difficult position when we speak to founders and we say, it's actually really hard for the VCs to fundraise here. Most of our fundraising happens internationally. More than half our capital comes from abroad as Global Ventures. It's not regional. So when we think about what's happening in the region, the quantification of venture is a challenge. And venture capital itself last year, our wonderful $2.6 billion of VC last year, 48% of that was from outside the region. So when we think about how much is the region investing in venture, it's $1.3 billion last year. That's enough for the entire ecosystem. So when we think about, is that enough? It's so far from where we need to be. As a percentage of our GDP, it's 15 times less than Europe. So if you were to bring that number up by 15 times from $2.6 billion, you're at about 40 billion, then you're equivalent to Europe as a percentage of GDP. And Europe's not even a growing venture ecosystem. Right? Then you're saying, okay, at $40 billion a year, we're now funding the 450 million people. And remember, we're half under age 30. So you have a lot of people starting great companies that are truly innovative and connected to the world because it's all digital. Then you're saying, now we have a level playing field in terms of funding. And then you can start to say, what's the gender divide? What's the regulation exists. It's simply a quantifiable number that we need to get to. Yeah. But we're at 2.6 billion. I'm very grateful. 6 years ago, we were at 400 million. If we 10x again in the next 5 years, that will be great, and then we'll get there. And we have to remain optimistic about that.
Why not?
And I want to add something. I totally agree with what Noor is saying. Regulation is not really a hurdle. Regulation has actually been really open across most countries to allowing venture capital to come in. I think there's a huge strategic prerogative from the top to allow it to happen. But there are idiosyncrasies in the way that investors behave and the way that markets work in this region that are unique. I think the way trade moves, the way investors' expectations of when they will realize capital gains are unique. Like we've seen business models that work here that don't work anywhere else in the world. BNPL is one of them. I think the food ordering habits in this country are blow everyone away. And Jam'iyya, we invested in a company in Saudi. So there are these idiosyncrasies that have taken time for us to discover. But I completely agree. It's on the contrary, it's not a regulatory problem. It is a matter of founders being sort of ingenious enough to make their service adaptable and local in a number of different countries. And we are just at the very tip of the iceberg. We're at the very, very beginning of what venture can do in this region.
So maybe Henadi would have more of an insight because you deploy funds across tens of jurisdictions, and maybe you can you feel that more in your line of work. What are the positive regulatory changes that you have seen take place in Kuwait and the region, for example? We know that Agility and Agility Ventures are prioritizing ESG in your projects and investments. What's driving your ambitions in this regards?
So I'll just take the flip side of the argument that both of you, put forward. And I agree, venture funding is quite critical. But on the flip side, if you look at sort of the thriving environments, the mature landscapes, or the developed ecosystems, let's take the U.S. as an example. What are the three fundamental elements that drive that system? A is government. Government when it comes to funding, regulation, providing opportunity for exits, all that stuff matters and is critical. If you look at the second element is universities. Universities from two aspects, not simply teaching and learning and creating sort of the right environment for students, but on the flip side of research and development, a really critical proponent. So if you look at the US last year, they issued around 3,000 patents just last year. And then the last piece is the private sector. Private sector, yes, when it comes to venture capital funding, investing, corporations investing. So these three elements are critical to build a thriving ecosystem. Now in the region, it's probably one of the most exciting times that I've seen. And you see all these changes and strides taking place within those three segments. You look at the governments, regulation is changing. When it talks about the sovereign wealth funds, you have, from Saudi to Emirates, all developing billion-dollar funds focused on VC, looking at unicorns. Not just that, even within Kuwait, Qatar, and so on, all of them are like doubling down in that area. You look at them addressing sort of the ecosystem of setting up companies, mobility, labor, all of these are changing. You look at universities, with Saudi, you have KAUST, which is focused on STEM. They've invested in close to 60 startups, and not just that, they've developed around 40 innovative products in the past year. You look at smaller examples like Coded, Kuwait. I mean, just a month ago, I looked at them training young women, exciting women, exciting ideas, and you can see 5-10 years down the road, these are going to be founders that, this platform will probably invest in. And then lastly, the private sector. I mean, you have companies like Agility, you have all these VC funds, you have corporations, all growing and enhancing and doubling down in this area and growing their funds. So this region is definitely, is setting its mark, and I'm quite excited to see it in the next 5 to 10 years.
Yeah, but I'm just wondering, as Tammer said, there's a lot going on in this region. So how are you balancing the supply of capital with the increasing demand for startups in the Gulf region?
So from our perspective, in terms of supplying capital, I think from the demand, we have it. From the demand side, it's really interesting, specifically look at the supply chain, which is an area in which we're doubling down on, and also energy and energy transition. And right there, these are critical areas that are booming in the region. And governments are investing in it. You see the sector growing, and it's really leveraging our core strength within the region. From our perspective, is we see a lot of entrepreneurs in that area. Just last week, it was this week, we met an entrepreneur in Kuwait who is actually focused on robotics within the warehouse, in fulfillment, moving the entire sort of human element out of the warehouse, which is exciting. So in terms of supply capital, I think it's relatively there, but it's a matter of just finding those golden nuggets to invest in.
Yeah, Noor, how are you meeting that challenge? Are you changing the ticket size?
So our ticket sizes have evolved over the last 6 years as our fund sizes have evolved. And as we've seen how we can get more involved with founders. So we have a framework, it's a 7-layer framework that once we invest, this is how we create value. It's our value creation work that we've refined over working with 60 founders. But I'll pick up on something Henadi said, which is KAUST as an example of a university. And one of the companies we invested in that came out from KAUST called Iris.
And I think once you wrap your mind as a female founder around the fact that we have to increase our investor funnel, you quickly run through your network and start to think, okay, how do I perfect the art of generating meetings from cold leads? So I think one of the biggest challenges female founders have to do is increase their funnel by 10x month on month or per quarter, and really try to close those earlier meetings. And I think one of the things that Playbook has done really well is be able to get 20% response rate from cold leads to score that meeting, and then from there we're able to score investment. One of the great playbooks that we were exposed to is the Peloton story. So the CEO of Peloton in the How I Built This podcast said that for over 3 years he had 3 meetings a day where he pitched to investors, and he would take anything from $300 to $3 million. And that also kind of created our formula that we've developed to ensure that we fundraise the amount that we need. Now, the challenge in that is, I think as a woman, no accelerator program teaches you how to deal with rejection on scale, right? So who wants to get rejected 98 times a month? And that's why predominantly women disappear at the Series A stage. It's extremely tough to deal with the amount of rejection, but also what program teaches you deep resilience on that stage, on that level. So I think a lot of the things that we can do to solve that is have accelerator programs that teach women a different type of skill set, which is how to deal with all the challenges when it comes to rejection. Now, Playbook has over 200 female founders on its platform. One of the biggest challenges that female founders have to grapple with is they went into this business because they were passionate about product and a problem that they want to solve. And one of the challenging equations that they have to wrap their minds around is one of the co-founders has to focus on fundraising full-time. So whilst our male counterparts can start and close a round, many female founders have an open round or a rolling round at the early stages to bring and continue bringing that money in. And that's not necessarily why they signed up to join this industry. So I think that's another challenge that female founders have to embrace. So we're extremely lucky that we have a person dedicated for that as a female-founded team. It also helps to add one male co-founder to your co-founding team, and that will increase your percentage of fundraising by 50%. Now, the third thing that Playbook has done to bring that investment in is we're very meticulous about our communication with investors. So we put together a quarterly newsletter from the very early stages of the business where we share it with our prospective investors, our current investors, and the investors who didn't want to invest with us, that gives them an update on our growth, our challenges, and we found that actually even with the investors who didn't come in to invest, they have joined or acquired or bought Playbook passes for their employees and have joined us as corporate partners. Now, one thing that I would love to see venture capital do is, or venture companies do is, women do disappear at the Series A or pre-Series A level. They simply cannot raise the amount of money that they need to continue to scale. And for anybody who has clear mandates that we're going to only invest in Series A, I think really figuring out how are you going to come in at the earlier stages, at the seed round, to provide support, and I think and financing. And for us, one of our investors has a very clear Series A mandate that we're not going to go before that, but he made a personal investment in Playbook to come in earlier to ensure that he can double down at the Series A stage. And you need those kind of leaders to come in and say, if I don't come in a little bit earlier, I'm not going to have that funnel at the Series A.
Well, it could be also because, as we said in the previous panels, they're risk mitigating. It's riskier to go into early funding. Just to wrap up, and I'm very aware of the time, I just wanted to ask you all the same question. If anyone in the audience is looking to start a business soon or raise capital, what themes are high on your agenda for 2025 when it comes to funding such startups? So, Henadi, I'll start with you.
So from our perspective, I mean, we're looking at two critical segments. One is the supply chain logistics. If you look at the market in the Middle East, this is where the countries are spending billions of dollars in terms of becoming sort of a super connector and logistics hub. And this is where there's a tremendous amount of opportunity. You just looked at the market size, doubling if not tripling over the next few years because of these investments. So that's, I think, one critical area. And then I think the second critical area from our perspective is energy and energy transition. I mean, it poses sort of the biggest opportunity and risk within the region. And if you look at the way the governments are doubling down and investing in energy transition when it comes to EVs and supporting that entire ecosystem is extremely important. And this is where we find a lot of opportunity. So from a founder's perspective, I mean, at the end of the day, when we look at VCs, literally 80% of the yes is obviously technology and everything, but more critically is the founder and how hungry they are and how they view the problem that they're trying to solve. So from our perspective, that is sort of the key element.
For us, as we look to next year and what we want to be investing in, I think there is this intersection of supply chain tech, agri-tech, AI, and how we're seeing all of that kind of come together to really create better solutions, scaling companies not just across the region but also globally. That remains what we really are focused on. We do invest in everything, so we are still sector agnostic. We've just completed a fintech investment, and we're about to do one now in an AI software that's focusing on call center facilitation. So we look at everything, but those are the areas where we get incredibly excited, and we continue to do so through next year.
Yeah, I think we're in this generational shift from investment outside of the region to investment inside. The scale of the capital that's going to be redeployed, what was previously exported into other markets, and this shift in how important it is to invest on the ground here is profound. And so I think that anything at the infrastructure layer that is basically picks and shovels on all of this new investment that's coming in is going to have a huge impact. I think one data point that we like to look at is, and then extrapolate from there, is if you look at NBK, for example, or if you take the top 10 banks in the GCC by market cap or revenue or assets or whatever you want to look at, and you calculate their net interest margin, so the margin at which they give money out against the margin at which they access money, it's like 250 basis points. And if you look at the top 10 banks in the world by market cap, and you calculate their net interest margin, it's less than 100 basis points. So these banks in this region are 2.5 times more profitable than the equivalent banks in the other part of the world. As investment comes in, there are huge opportunities that will eat into these types of margins. And so I think fintech, from our standpoint, is still, there's a tremendous amount of upside in that sector. And I think climate tech is the other that we think plays in with government prerogatives in a major way. So that's where we're looking.
Yeah. Wafa?
I think just echoing what Henadi said, I think as a startup, we're very driven by our mission and how passionate we are about solving the problem. It's a big problem to solve. How do we participate in closing the gender gap? How do we get more women into leadership positions? And how do we use that using the tools that we've built in our platform? So we have masterclass content. We have access to over 200 coaches and experts. We have access to, we do enterprise solutions as well with different entities where we create programs and we digitize them on our platform. We obviously have Women Spark with its access to demo days and automating fundraising as well as automating connections. So that's what we're really focused on. And we try not to stray away from what our superpower is right now.
Yeah. Wafa, Tammer, Noor, and Henadi, thank you for being here.